Here's your education tip of the day. FHA loans are becoming too expensive and the rebirth of conventional loans with minimal down payments. HUD is currently in discussions, and this is up for review right now, whether to increase the down payment for FHA loan from 3.5% now to 5%. And the biggest thing here is FHA is at the standpoint of almost exiting the market. I'm not saying completely exiting, but they're definitely pulling back from the amount of market share that they have grown to as of today and where they like to be as of overall market share of financing homes in the United States. Now, with this said, you could say that basically when you don't want any more business, you kind of price yourself out of the market. We see lenders do it on a month-to-month basis, and now FHA looks to be doing that to slow down their volumes of amounts of homes that they're financing in the United States. Now, in retrospect, let's look at the conventional loan side. Just introduced yesterday, which is very exciting, we have a conventional loan that now goes to 97% with a 3% down payment that can be gifted. Now, here already, that's a lower down payment than FHA. Another thing comparing to FHA is that you have a upfront mortgage insurance funding fee of 1%. The conventional loan doesn't have this. And on top of that, you now have the mortgage insurance on a monthly basis. With this new loan introduced to the market with a lower down payment, it has a monthly mortgage insurance of 0.88% opposed to FHA's 1.15%. The one drawback that we're finding in this program, because the conventional loan cannot directly compete with an FHA loan, is the credit score requirement. The one thing that we're seeing with an FHA loan that's still an advantage to a lot of home buyers out there that don't have the perfect credit, it goes down to a 620 credit score. With this new loan introduced to the marketplace that's going with a 3% down payment, now has to have a minimum of a 720 credit score. So obviously there are some factors to consider, but here again, we are FHA approved lenders. We're not saying FHA is going away. It will always be a staple of financing for the United States homeowners out there. But the one key thing, and it all comes down to strategy and education on your behalf as a current and future homeowner. It all depends on who can educate you properly to make sure you're taking advantage of the most potential opportunities to increase the amount of savings that you'd have as a new homeowner, overall impacting that bottom line that we're all very sensitive to in today's market, the monthly housing expense. Thanks for tuning in to the tip of the day, and now your mortgage rate watch. This is your mortgage rate watch for Tuesday, May 24th, and I'm Keith Akada with the Mortgage Reel. Just a few minutes ago, we had the 2-year note auctions of the treasuries in the tune of $35 billion that were auctioned off that received a B+ rating, which is actually very good for the marketplace. And in direct result, we're seeing the bond chart this morning, if you're looking at it, show a positive tick up, and this is helping to improve and push your interest rates slightly lower. Also, some good news coming from the housing sector as far as new home sales that came in better than market expectations, which is hopefully signs of a long and slow improvement. Month to month, it just seems like it's a seesaw battle back and forth, but overall, new home sales are showing better than market expectations as of today. Make sure to leave any comments, feedback, or questions below. We'll make sure from Team Mortgage Reel to get back and answer those as quickly as possible. We have a special request we'd like to make before you leave, and hopefully you've enjoyed today's clip. Make sure to check on the home page, click on the banner at How to Beat the Banks, and that'll take you directly to our Facebook fan page. We definitely put out more and more information and to create transparency in the financing process of home ownership. We're big advocates of home ownership, obviously, but we want to make sure it's as easy as possible to understand what's impacting and the education necessary for home ownership today. And when you're visiting us on Facebook, make sure to like us when you're there. Thanks for tuning in to Your Mortgage Rate Watch. We'll be back with more news impacting your largest investment, your home.